Hi everyone, it's me Socrates again. I've developed a home purchase calculator spreadsheet to assist an individual with determining the particular date that they will be able to purchase a home, and also to calculate the monthly mortgage payments to determine if the desired home at the total purchase price is within the person's budget. These calculations are based on basic inputs, such as the monthly take-home amount, the total of all assets, investment totals, and bank savings totals, the desired total home purchase price, and the desired down payment percentage. Monthly take-home amounts along with asset totals can be inputted for up to 2 people in case the individual plans to team up with another person to purchase a home. I hope the spreadsheet and tutorial is very helpful for everyone. Now it's time to explain how the spreadsheet works. Throughout the spreadsheet, the yellow highlighted cells represent a user input. On the top left, we first begin with inputting the total home price, the down payment percentage, which is recommended to be 20% in order to avoid having to pay for private mortgage insurance, PMI. The special thing about the spreadsheet is that it takes into account an additional amount, which can be considered to be a buffer amount that is added on top of the down payment total to give you a more accurate and realistic date that you will be able to afford the particular down payment amount. The down payment total is highlighted light blue, and the adjusted grand total, which includes the additional amount, is highlighted dark blue. The additional amount can be inputted for person 1, person 2, and for both people combined. The blue highlighted colors will make more sense as we continue through the spreadsheet. I have included a separate tab to help you calculate the additional amount. The table on the right is an example you can use to help you to determine what kind of unexpected expenses you'll incur throughout the years. The additional amount is based on your unexpected spendings between now and the future date of reaching the total down payment. For example, if we are in 2022 now, and the 20% down payment total will be reached in 2028, then you'll input spending values based on a 6-year period, 2028 minus 2022. Remember, these values are just a rough estimate, so you don't need to get too specific. At the same time, you should also consider how much the monthly payment of your mortgage will be based on your down payment percent, the interest rate, the APR, the annual percentage rate, and the loan term, the number of years you'll take off to pay the loan. The monthly payment is important to know so that you can determine if the house you want to buy is within your budget. Additional parameters shown under the Advanced Inputs table that are included in the monthly payments and which are helpful to know include the annual property tax, the homeowner's insurance, and the homeowner's association fees, the HOA fees. The spreadsheet assumes a fixed interest rate for simplicity. A variable interest rate is beyond the scope of this tutorial. The amounts of these additional parameters vary, so it's best to do your research to find a particular average cost based on the region you live in. If you have a friend or a relative in real estate, then you can consult with them to obtain realistic numbers. In this example, we will assume a desired home purchase price of $1.2 million, a down payment percent of 20%. We will return to the additional amount boxes later. Mortgage APR of 2.5% and a loan term of 30 years. Property tax percent will be 1%. Homeowner's insurance will be $120 a month, and HOA fees will be $250 a month. On the top center and the top right of the table, I've included some notes to help you start off with an assumption of values for some of the parameters, and also provided useful educational links to Investopedia about home buying. I highly recommend you check out these resources and take the time to understand the basics to home buying. Moving on to the special part about the spreadsheet, which is the monthly take-home totals, the spreadsheet lets you input information for up to 2 people. For the table headings, I've color-coded them to make them easier for you to understand. Light red represents the month, light yellow represents columns where you can input your values, and light green represents the columns calculating the totals, which have formulas applied to them. The columns are labeled by letter, A, B, C, D, E, F, G. Let's start with person 1. You'll first input the monthly take-home amount from your job. You want this number to be a consistent average number based on your best judgment after considering all your typical expenses and bills. The spreadsheet assumes that you'll receive a pay raise of $100 per year, which takes into effect in January at the start of every year. However, everyone's pay raise situation and amounts are different, and some people receive raises mid-year. Or maybe a person switches jobs or gets promoted, in which their monthly take-home has substantially increased or decreased. Whatever your situation is, feel free to manually override the values throughout the months to your liking. You'll then input your investments total, such as for Robinhood, TD Ameritrade, etc., and your bank savings totals. This information is good to know in case the individual intends to spend from these two areas in addition to their paycheck totals to purchase a home. Note, as of the time this video was created, we are well past January of 2022. We are currently in May 2022. In this case, input your numbers starting with the current month. In this example, we'll use a monthly take-home of $2,000, investment of $20,000, and bank total of $30,000. Columns B, E, F, and G are the combined totals of the respective columns. E would be your monthly take-home total plus investment total. F would be monthly take-home total plus bank total. And G for grand total would be your monthly take-home total plus investments total plus bank total. In my personal opinion, I highly do not recommend to rely on B plus C and B plus D because you'll want to leave your investments alone to allow your money to grow upon itself throughout time, and you'll want to have an emergency savings fund in case your employment stops abruptly and for any particular emergencies, such as for family. Scrolling down, we can see that the spreadsheet shows that August 2030 will be the date that we will reach the 20% down payment total, $240,000, as shown in the dark blue highlights. However, we need to apply an adjustment to the number to obtain a realistic date that we'll actually reach the 20% down payment total. Between now and 2022 and August of 2030 would be around 8 years, so we will need to input an additional amount based on person 1's unexpected spendings throughout the next 8 years. We will assume $100,000 for person 1's additional amount. Input that in the top left box. Do the same for person 2. In this example, we'll use a monthly take-home of $2,500, investment of $50,000, and bank total of $60,000. The down payment date shown as we scroll down is May of 2029, which is a period of 7 years. Therefore, input the additional amount based on person 2's unexpected spendings throughout the next 7 years on the top left of the spreadsheet. We will assume $50,000 for person 2's additional amount. On the far right, the third table is the combined totals of both people on the spreadsheet. The combined monthly take-home running total, the combined investments, combined bank total, and the combined assets. As we scroll down on the combined table, based on the blue highlights, it is clear that if you team up with a second person to purchase a home, then you can purchase the home much sooner than if you were to do so by yourself. The spreadsheet shows June of 2026 to reach the down payment total. However, we will need to apply the additional amount adjustment like we did for person 1 and person 2. This additional amount is based on both person 1 and person 2's unexpected spendings between now and that down payment date of June of 2026. So between now and 2026 would be a period of 4 years. Again, you can use the additional amount calculator. On the bottom right, I provided another table to calculate this amount to keep everybody separate. Person 1 table, person 2 table, and the combined table. Going back to the top left of the spreadsheet, we will assume that the combined additional amount for both people throughout the next 4 years will be $75,000. Also, if you wish, you can include additional months and years to the table if you want to project your finances further out past 2038. Just click and drag on the last row of the table and check your formulas to make sure everything is being added correctly. For example, I'll highlight everything down here and then drag as far out as I would like. All the formulas should auto-calculate. After you do that, just double check to make sure that on January or whatever month that you expect your pay raise to take effect on, that it applies the additional amount to add on top of your paycheck. Now let's analyze the data to see what it's telling us. Based on all of these parameters, the earliest date person 1 would be able to purchase a home at a 20% down payment would be August of 2030, shown in the highlighted light blue color. That would be 8 years from now. B plus C, B plus D, and the grand total shows that the combined assets would allow the person to buy a house sooner. Now when we consider the additional amount, the unexpected expenses throughout the next 8 years, it shows that the realistic date that person 1 would be able to purchase a house at 20% down payment would be June of 2033, 3 years later. The same logic is applied for person two's table. Person 2 would be able to realistically buy a home by August of 2030 after considering the unexpected expenses from the additional amount. Remember, this additional amount will be based on the unexpected spendings between now and the date that person 2 would reach the down payment date. In this case, it will be a time span of 7 years. 2029 minus 2022. When both people team up, they can realistically purchase a home by August of 2027, much sooner than if they were to do so alone. Again, the additional amount for the combined total is based on the unexpected spendings of both people based on a time frame between now and the date of reaching the down payment total for the combined total, which is 4 years. 2026 minus 2022. Therefore, knowing all of this information and the range of dates you'll be able to purchase a home, you'll be able to plan better on managing your finances and savings in order to hit these target dates. Returning to the top left of the table, we can see our monthly payments for this $1.2 million house will be $5,100 per month based on these assumed parameters, which is very expensive. As a single person without a partner, this would be fairly difficult to pay off monthly. So what are the options? Well, you can team up with someone else and split the cost per month, and or rent out the house to other people to live in to help pay off your monthly mortgage payment. You can get a second job, or your family and relatives can help pitch in to help pay for the house and the monthly payments. Or you can get creative. In the end, however you decide to tackle on this challenge is completely up to you. For some people, they might want to see this bottom table more, and this is taking too much space on the spreadsheet, so you can go ahead and unfreeze the panes by going to View, Freeze Panes, and press Unfreeze Panes. Now you can see the rest of the table, and when you're ready to freeze it back again, go to Row 16, View tab, Freeze Panes, Freeze Panes. To summarize how to use the spreadsheet, input the total home price, the down payment percent, the loan information, and advanced inputs first. Next, determine the earliest date that each person, and also when both people, will reach the down payment amount. Using these time frames, you'll then determine the additional amounts for person 1, person 2, and the combined based on the unexpected spendings between now and that particular earliest date. Again, you can use the additional amount calculator to assist with that. Finally, you can then determine the realistic date that you can purchase a home based on all of the parameters you have inputted. I hope this spreadsheet and this tutorial is helpful to everyone. Feel free to share it with your friends and family, and make sure to like, comment, and subscribe for more epic videos. The spreadsheet file is available on my website for download. Also, if you're looking for an advanced budgeting spreadsheet to help you plan your monthly expenses and your monthly take-home amounts, I have a separate tutorial and spreadsheet available for download on my website. Please check out the video description for more information. I hope everything goes well for you in your future house purchase journey and your financial planning. Thank you for watching this video, and this is me, Socrates Fam. Until next time.